in the Strategic Petroleum Reserve. So we have a lot of crude oil. And one thing about this Saudi situation, the crude oil that's affected really in Saudi Arabia is light crude oil, Saudi light. That's almost the same kind of crude oil that we got here in the United States. And we were having a little bit of trouble finding home for that crude oil in the last couple weeks. There's basically a scarcity for heavy grades. We have light crude oil to go around. Now our export capabilities are a bit limited. We're at about a little bit over 3 million right now. We probably could get to 4 million, but if the Saudis start to have trouble, we're going to find out really quickly if we can get to 4 million.
And you had mentioned that the Strategic Petroleum Reserve, President Trump actually authorized the release of that. So when would we need to access those resources?
Okay, there's a series of events here that will click off pseudo panic in the market if they happen. The first one, when you know there's a little bit of trouble, Saudis have about 36 more days worth of storage capacity where they can give their customers crude oil that's in storage right now. That's fine. If they start to ask their customers to take heavy grades instead of the light grade that they're contracted for, and that gets to the press and that gets to the rest of the customer base, that gets to the industry, there's going to be a little bit of panic if that's the case. If the Trump administration has to honor the SPR and somebody wants to start lifting barrels from the SPR, that's the next level. People are going to start to panic a little bit. That means it's getting tight. That means it's getting ugly a little bit. And finally, if the Saudis say force majeure, if they say the F word, then we're going to really get a bid. That would be, they're going to try and avoid that at all costs. Because at the end of the day, they are in danger of giving up market share to the Americans. They've already lost enough market share to the United States. Last thing they want to do is add more barrels to the United States side of the equation.
I mean, it seems like there's a lot of political premium in oil prices as well, which makes it a little bit risky.
Absolutely. I mean, I'm going to make the argument that we may pull back this if nothing changes. If the military situation stays the same, there's not another strike, the United States doesn't strike Iran or something crazy like that, I would tend to think we would pull back to this area right about here-ish, 57.50-ish, and that's $2.50, $3 higher than we were on Friday when we went out. I think you're probably going to end up with $2, $3 worth of risk premium that the market will have to digest as a function of this situation.
All right, now the obvious question is the impact to the energy sector. Is now the time to jump into these stocks? Because if everything remains the same as you had said before, crude's going to come back in.
It depends on your risk profile. I think we're going to pull back, and I think that's usually the way things happen in these kind of spike situations. It always pulls back. It kind of leaves the panic buyer hanging in the wind to a certain degree. However, there is definitely scenarios that you could paint that would take this thing above and beyond. I mean, if the United States got involved, we have the USS Abraham Lincoln Carrier Strike Group is in the Persian Gulf area right now. It's actually in the Indian Ocean, right outside the Strait of Hormuz. But if that were to get involved in any way, shape, or form, this goes to the next level.
Yeah, but what about the stocks themselves? Because the energy sector has been beaten up. I believe it's the worst up for the year, but relative to the rest of the 10 other sectors within the GICS complex, they're beaten up. So is now the time to get in, or do you think we
I'm going to say you could really rolling the dice there because I expect the pullback is the most likely scenario. And if that pulls back, energy is going to pull back with it. And if that's the case, then you're not going to really get a premium out of this. I don't think the most likely scenario is the upside. I like us pulling back a little bit here. So no, I don't think jumping in with all your gusto is the thing to do. Now, if you're willing to take a hit, if you're willing to take a $2 hit to make $10, this may be the place for you on the other hand. So those people with a high risk profile, Pioneer Natural Resources, say for example, was second best name on Friday in the S&P 500. And that was before this stuff even happened. Obviously, people like the name somewhat. It was a big name in the sector rotation, which was a common theme in energy last week. If this goes off to 70, Pioneer is going to take off, probably even beat the percentage that's in crude oil. So is it worth to roll the dice? For some people it is, but on the other hand, it could pull back 6-7% in a week also. So if that's what your thing is, you want to roll the dice, Pioneer Natural Resources, Amerix Energy, names like this, they could hit for you for a nice premium.
All right, Bob. As always, thanks so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.